All right, disclaimer. I'm not a financial advisor, and this isn't a way of financial trading advice. I'm simply sharing option trading strategies that I use and have been successful within the stock market. This presentation for educational purposes only. There are significant financial risk involved with trading. I'm not responsible for your losses in the market should you decide to utilize the information and or strategies discussed within this presentation. By choosing to proceed, you are acknowledging your understanding of this disclaimer. Boom. Still got it. Still got it. All right. So when it pertains to getting prepared for the week, whatever your strategy is, you want to always make sure that you research the stocks that fit your criteria over the weekend. My criteria, all right, is strat setups. All right. So if you go to what is it? Market Facts and Resources, not the storehouse, but the regular one. All right. If you go there and you scroll up, you'll see the strat cheat sheet. So with the strat cheat sheet, let me pull it up on the computer so y'all can see what I'm talking about. Boom, 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 boom. Here we go. One. Here we go two. All right. Boom. So I'm always looking for things that have these setups. All right. So essentially, whenever I'm looking for this stuff, I use the annotation tool. All right. Essentially, whenever I'm scanning, this candle hasn't been created yet. All right. This last candle, whenever you're looking at the strat cheat sheet, this hasn't essentially been created yet. This is basically what you'll be looking at. Basically, you'll see these two candles, right? Before you see this third candle. Boom. And then on the opposite side, you wouldn't see this one yet. Or basically, well, let me undo. With the three, you wouldn't see this part of the candle yet. It would still be a two. All right. So it'd be a two, but it'd be like a failed two. All right. And then for the green one to the upside, basically you wouldn't see this part of it yet up here. All right. So it will look like this coming back through the range. Here's your 50% mark. All right. It's your 50% mark. So essentially, whenever you're looking for the scanner, whenever you're scanning, all right. Because I don't really scan for PMGs, but essentially on the chart, and we're gonna go look through the charts. All right. You wouldn't see this last candle. All right. Whenever you scan, you're basically gonna see a 3-2 up. So I, scan for it. Most of the time, I don't scan for a 3-2 independently. I just scan for like a bearish 2 up. Which means a candle that's a 2 up that's red. If you don't understand the numbers on the chart, you need to watch Intro to the Strat, and then you need to watch the Strat Part 2. For whatever reason, I didn't title it the Zoom Intro to the Strat Part 2. I just titled it like the Strat Part 2 or something like that. But it happens like the next week after that Intro to the Strat Part 1. All right. But essentially, whenever you're scanning, you'll basically be scanning for like an inside candle. All right. And then it'll basically it'll pull up both 2 1s and 3 1s whenever I scan a trend spider. Because I've never used Runstrat. I use Trend Spider. All right. So basically, whenever you're looking at the charts, you'll see this right here. All right. Before you even see that last candle, which you're hoping when it breaks the high or breaks the low of the previous candle, that's when you get the actual full-blown setup. So whenever I'm going into the week, I do all these different scans. All right. So if you watched the watch list and chill already, one of the examples I'll go over is like Twitter. If I start on the quarterly chart, which is 3-month chart, basically we have a potential 2-2 reversal if we were to break the high of this candle right here. So once tomorrow opens up, we'll get a new quarterly candle. All right. We'll get a new monthly candle, a new weekly candle, a new daily candle. And what I'm looking for it to do to get the 2-2 rev on the quarter is for it to break above 45. All right. So if I pull back up, the strat cheat sheet is not that one, it's the other one. Hopefully I don't. There we go. I'm basically looking for that 2-2 reversal to the upside. All right. And then breaking the high of the candle. So right now, again, this candle hasn't been created yet. But if we whenever the market opens tomorrow and we get that new quarterly candle, if we were to continue to push to the upside for um Twitter, would be looking for that 2-2 reversal. Another example would be Amazon. All right, Amazon, if I hide all these drawings, right, it has a 2-1. All right, um 2-1 quarter. So I'm not looking for a 2-1-2 reversal here. I'm just really looking for the continuation. I don't think the continuation is on here, which is fine. But um essentially I'm looking for this right here. This 2-1-2. All right. Or it could go 2-1-2 reversal to the upside, but it looks like it's closer to going 2-1-2 continuation if the market does continue to be bearish. So essentially, this is what I'd be looking for, right? Either way, upside or downside. But long story short, this is what it looks like when you're initially scanning for these setups or just going through your charts manually to find them. You're basically looking for this 2-1. And then when that next candle appears, you're looking for it to either go 2-1-2 reversal or 2-1-2 continuation. But this is what it looks like before. This is what it looks like when you're actually looking for it. Then when the next candle appears, that's when you're looking for it to, break that low or break that high. Some people, uh, and understandably so, they think they're looking for a 2-1-2, and then they just play what it does after. It's like, no, you're looking for a 2-1. And then when it goes to by breaking the low, you get in, or if it breaks the high, you get in. And that's what the black line is. It's supposed to be your entry, which it doesn't say entry, that's why it can be confusing. The red line is essentially your stop, which is at the 50% mark, which it says right here, stops placed at 50% of trigger candle. All right. So going into this new quarter, right? I always want to start by looking either at a quarterly chart, which for Thinkorswim it'll just say quarter. For TradingView, it would be a 3-month. If you're paying for TradingView, basically you would have to go right here and go down here to where it's basically giving you like a 1 in minutes, and then you basically would have to change this to month to 3-month and add you a 3-month chart, and then time frame basically, and then add you like a 12-month because you probably don't have a yearly either, right? You would have to add that. If you don't have a paid TradingView plan, you're not going to be able to add time frames. But that's ultimately how you would do that. And this is me using um TradingView desktop download, but it would look the same way if you did it through browser. All right, it would basically look the same. And how you would go about adding those time frames. So anytime we're about to get a new quarter, which means like, the month is already closed out, or 2 weeks leading up to having a new quarter, I start looking at those quarterly charts automatically, because the last 2 weeks of that month before the new quarter comes, all right, it's going to start setting up that quarterly a lot of times. And you always want to be thinking ahead. What will the next two create negator do? That's what Rob Smith, the creator of the strat, always says. So if we go to the monthly chart for Amazon, right, you could have been in October contracts once we went 2-2 rev on the month. All right. Because you could have been thinking, if we continue to push down, that's basically, I know we're inside quarter, that's going to continue to give it a higher probability that we end up going 2-1-2 continuation. And you already got a great entry, probably already could be up, 100, 200, 300% on those contracts. That's how you set up yourself to, swing trade and get these great entries and be able to continue holding for a while. All right. That's how you set that up. You always want to be looking ahead. And you're not necessarily predicting, but it's using probabilities and taking a uh, calculator risk. Yeah, when I say rev, I mean reversal. Do you include the wick? Yes, the wicks are included. I'm using TradingView. and market facts and resources for the strat cheat sheet. Make sure I answer all the rest of these questions. All right. The other thing that you want to start doing is do this same process. The next thing you want to do is do the same process with the sectors. Now, one of the things that you always want to make sure you're staying up to date with is the economic calendar. Easiest way to do that is using forexfactory.com. All right, use forexfactory.com /calendar, go to the calendar. All you want is the USD currency on, because it's just going to give you like all US market related stuff. All right. That way you don't have to ask when somebody is talking. When is Powell talking? When is Jefferson talking? Who's talking right now? You should have forexfactory.com /calendar in your repertoire. All right. So write it down. forexfactory.com /calendar. We need to mitigate. It's one of ICT favorite words to use. We need to mitigate people asking who is talking next during market. It is very let me get on one of my rants real quick. What if you don't know nothing about the candles? How can you learn it? Intro to the strat, part 1. What if you're using MACD and CCI, but the RSI is under 30? If you're using that, I would say, for instance, if that's your strategy, you need to know how that strategy works. I don't use that stuff at all. I don't use that stuff. I ain't never used that strategy. That's not my strategy. If that is your strategy, you need to be doing back testing and see which stocks work with it under 30, which stocks don't work with that particular setup under 30. You got to spend some time charting, going back over your charts and see that. One of the biggest things is understanding like if you're using a strategy that's different from other people, it's not for other people to make sure your strategy is right. It's for you to back test and make sure that strategy is set up right. I think Ralph's talking about your last week's class. I don't know what you mean, but it still would be intro to the strat when it comes to the candles. When it pertains to Ralph, it would be intro to the strat. I'm answering the person Zane with what I said. When is the date for the strat video? I've tried looking at the Will Squad University list of videos and unable to find the exact title. It's literally intro to the strat. The date, I don't know off the top of my mind. Last week's Zoom, right? That wasn't me. Like, and I think you're misunderstanding what Ralph means. Because literally that's still intro to the strat. Like, what people gotta understand is when I say intro to the strat, that is actually the strategy's name. A lot of people, for whatever reason, they see people saying strat and they think they're just saying strat short for strategy. There is no strategy out there that we call strat. Like the strat is an actual candlestick strategy. For whatever reason, people start just running with saying just, oh, what's Chris's strat? No, you say strategy. You say the full thing. Strat is an actual strategy. Literally, it's literally called the strat. That's not me saying like that's my strategy for short. No, that's literally what it's called, the strat. Like, can't even make it up. So like if I go right here and you start scrolling down, which I think I did it maybe back in April. Let's see. Oh, I thought I saw my name. Nope. Here you go. The strat part 2. I don't know why I didn't say intro to the strat. Strat part 2, intro to the strat. Literally, if you just keep scrolling down. So April 24th and May 1st. Those are the 2 videos to get started with learning the strat. So yeah, that's actually what it's called. That's the only thing that should be referred to in the chat as strat. People think we just abbreviate and everything. No, when you say what is Chris's, when you want to know what Chris does, you say strategy. You don't say strat. All right, that is an actual strategy name, and you're gonna confuse most people if you say strat because Chris don't use the strat. Um, I don't even know what. Oh, Chris does RSI and price channels. I don't use that. Um, but yeah, those would be the two videos. So, um, when it pertains to if you use something outside of the strat, I personally won't be able to necessarily help you because I don't use that. That's not my strategy or anything like that. All right. Um, so yeah. But going back to this, you need to have this. You need to know when people are speaking. You should know what's coming up. You shouldn't have to ask in the chat. There's too many people that's been here for a while that ask for this stuff, which shows a level of laziness. Because we've typed which places to find this information, um, and need to quit being lazy. All right, you need to look it up. You need to write it down. You need to have it on your computer, have it in your phone, who is speaking, what time they're speaking. Uh, ain't no shortcuts unless you just forget. And sometimes even I forget, like, oh dang, that person talking. Other than that, it shouldn't be too much asking unless somebody's brand new. Instead of telling them, well, no, tell them and then give them the link. Hey, if you want to keep up with it further, forexfactory.com/calendar, boom. Other than that, because I don't necessarily watch when these people are talking. Gullah normally drops the links to the videos when people are talking. I personally don't watch that stuff because they speak in circles. Um, I'm not fluent in that language of speaking in circles. So it just makes my head hurt. Um, can I draw broad information for potential setups if I have time? I may draw some broad informations. I can't guarantee that. Um, Broad informations are very simple. To me, obviously I've been doing it a while, so it probably is very simple to me. But if you actually watch the video on broad informations and you take the time to listen to understand, because some people watch videos and think just because they watch the video once or twice, it's going to automatically sink in. You have to watch a video for understanding, not watch it to hurry up and learn stuff, to hurry up and go trade with live funds. That's a lot of the mistakes people are making. It's like they say don't eat before you swim, right? A lot of people are stuffing their stomach full of food and going and jumping in the pool instead of letting the information digest. All right. So you hurrying up, learning stuff, trying to go jump in the market, and you cramping up, you're hurting, your account getting clapped. All right. Instead of letting the food digest, giving it a couple weeks, a month, letting that info sink in, making sure that you can recall on that info when you sweating and like, dang, do I get out? Do I stay in? Being able to recall on that info to make sure that you're properly executing uh, in real time. Okay. So make sure that you have this down. All right. Other than that, going on Twitter, all right, and going to earnings whisper, because I know it's about to be earnings season. All right. So their Twitter handle would be eWhispers. All right. And then seeing what earnings we have coming up this week. So this week, I see Levi. I don't personally play earnings. I don't even really necessarily play earning run-ups. All right. But this week is like a lackluster earnings. I don't think anybody cares about these companies other than maybe Levi. But this is how you would keep up with the earnings aspect of, being prepared for the week, right? Because now we're on preparation for the week. Now, the other aspect would be, so y'all have it, sectors SPDR for the people who don't know the sectors yet. All right, sectors SPDR. All right, from here, I'm pretty sure you probably could click on the sector and then I don't know if it actually tells you the holdings of the sectors in here, but that's something quick that you can Google. All right. As far as what stocks are in what sectors, I use Thinkorswim for this. All right. So if I bring Thinkorswim over, just to give y'all this basic rundown of this information, I use Thinkorswim. All right, I go to the Analyze tab in Thinkorswim. Then I go to Fundamentals. So I'm about to click on Fundamentals, Alt 6. Then I type in the sector, XLP for consumer staples. And then from here, I can see the top holdings in consumer staples. You do all that through Thinkorswim. Mostly, I do most stuff through Thinkorswim, except for scanning for strat setups. I use TrendSpider for that. All right. So this is how you figure out the holdings, and then you can pick what stocks you want to add to your watch list based off of that. All right. So like XLE, boom, go to XLE. All right. You see ZOM is number 1, XOM, CVX, Oxy number 5. All right. Want to do like XOP, which isn't one of the, it's a different sector, but it's not like on the sector SPR list, but XOP is like oil and gas, stuff like that. You see Oxy number 1 and XOP. All right. So I use Thinkorswim when I initially was building my watch list to figure out what sectors, what stocks are in what sectors. All right. That's how you can do that other than using like sectors SPR. If you don't have Thinkorswim, you'll use the sectors SPR, figure out what the name of the different sectors are. Then you start Googling what's the holdings in those sectors. It's probably another way, maybe using FinViz to look at them. I can't remember, but that's ultimately what you would do. Now, using that information and knowing the different sectors, that's when you start looking at those charts. So looking at XLP, all right, XLP on the quarter is a 3-2 continuation. The chance of it potentially going 3-2 reversal to the upside is probably slim, just because of where price is going to open at. If anything, it probably will open, and especially if we gap down or something, and probably ought to be a 2-2 continuation. All right. So next, if you went to like XLE, see XLE has a doji, right, on the quarterly chart. So that it still could go down, but with the OPEC meeting this week, which is, when the countries of 40% of the world, 40% of the world's oil supply get together and determine their production levels. If they determine that they're going to decrease production, that could be very bullish for oil this week. So Wednesday, you're going to want to be paying attention to what decisions are they making out of that OPEC meeting to see if Oxy is going to take off or CVX is going to take off, or if they're going to dump. All right. So XLE with the doji, all right, on the quarter, that's indecision. All right. So whichever way it breaks this upcoming quarter, it can continue to push. All right. Then you will look at like what I said XLP, XLE. You have XLV, which is healthcare. All right. Healthcare inside quarter. So we could go 3-1-2 continuation because this 3 is red. So it'll be a continuation to the downside this upcoming quarter. You will mark the high and low, and then you will pay attention to healthcare stocks potentially taking the tumble this upcoming quarter. All right. And somebody says, how do you know what smart money is doing? All you got to do is essentially look at the different sectors and see what they're doing this week. If a sector has a 2-2 reversal on the week, that means that week is bullish, right? A 2-2 reversal to the upside, right? And it's green on the weekend, it's above the previous week's high, it's bullish. And you would do that just on a day-to-day basis. If your sector is pushing to the upside and breaking higher than yesterday's high, the stocks in that sector are probably also taking off. All right. So I'm looking at it at these different sectors, especially whenever I'm in the trading day. All right. If I'm looking at Oxy, what is XLE doing? XLE is going up. Oxy should be going up. If Oxy isn't going up, maybe it's lagging behind XLE. And I could take that, and maybe because all the other ones that are already gone, maybe CVX, XOM are already taking off. Oxy might be a laggard. So it might be slow to take off. I can get a better entry on Oxy. So when it does finally take off behind everything else in XLE taking off, I can be like, all right, cool. I'm gonna enter this. Everything else is pushing up. Boom. Um, the other way you could see it as, if let's say Walmart's going up, but consumer staples is dumping, Walmart is probably going to start coming behind consumer staples. Same thing is lagging, basically, right? You can get a better entry for puts. I think that happened like one Friday. I think consumer staples was dropping. Walmart consolidated for a little while before finally dumping, and they just dumped the whole rest of the day. And this was like 2 Fridays ago. So not this past Friday, but last Friday. All right. So XLV 331 on the quarter, right? Then you would go to XLK, which is I think communications. Oh, technology. XLC is communications. Tripping. So XLK is going to potentially be a 2-2 continuation on the quarter. Just looking at the candle, how it closed, it's probably going to go 2-2 continuation. This looks like a Momo shooter to me. But it might continue pushing to the downside. All right, if we go to XLC next, communications, that's looking like it's going to be a 2-2 continuation on the quarter. And it's looking like it's close to taking out this next quarterly price target of 41.59. The way it's just been dumping crazy. And I think like Meta's like top uh in there. Let me type in XLC. Yeah, Meta's number one in XLC. Meta been getting killed. So we like what we did: XLV, XLK, XLC, XLP, XLE, XLY, consumer discretionary, right? Inside quarter, right? It's looking like it potentially can go 2-1-2 continuation. XLY, I think that's like Amazon and stuff like that. Yeah, Amazon's number one, Tesla's number two, HD is number three, right? And Amazon has the same setup. And that's one of the beautiful things about looking at the different sectors. If you pick a stock that is correlating with the sector, right? Amazon looks the exact same. So if XLY go 2-1-2 continuation on the quarter, guess who's more than likely going to 1-2 continuation on the quarter two? Amazon. All right. That is literally how you do that. All right. That is literally how you go through these different things and you prepare for your quarter. You prepare for your week because it's the same thing. If we go to like a monthly basis, because we are getting a new month, it's looking at the same thing. If I go back to XLY, look at that. The chart looks the same as Amazon. Obviously, Amazon is number one, right? The chart looks the same. If we look at HD, chart looks the same. It doesn't have that bearish candle that closed as strongly as Amazon and XLY, but it looks similar. This is what you are basically paying attention to. All right. What do the red and green tabs on the chart mean? I do not know exactly what you mean right now. The red and green tabs. I don't know. Long story short, my setup, I have, I'm using the Strat Teach V2. I don't know if they're talking about like this down here, but long story short, these are just my different indicators. The lines, that's just price targets and stuff, things of that nature. They're at the top and bottom of candles. That's the script. All right. Not even finna go into explaining that. That's just the script. I know curiosity it kills, but that is like not really that important. It's just a tab. Don't even get distracted with that. I would start preaching because that's something so a preacher would go to. You see how the devil distracts you from learning something when you're supposed to be learning. You're focused on all this over here when you should be focused on all this over there. Anyways, today's Sunday, right? Yeah. So yeah, I wouldn't even worry about that. But yeah, so essentially that's how you would do that. All right. That's I'm sorry, I'll be just mind just go all crazy places. I like joking. The Strat Teach V2, I like it better. Yeah. The person who created the Strat Teach V2, I have a relationship with. The dude is great. I think he's out of the Netherlands or he's in a different country, long story short. So like certain things I want to add it to the script, he added it. Well, I don't think I added anything to that exact script. I added some to his Strat Alerts script. Um, but yeah, he's a dope dude. If I want something added to the indicator, I could just reach out to him and say, hey bro, can you add this? Things of that nature. So for me, that makes it dope because if I can have things that I would like to see in a script added to the script, I'd rather just use a person's script that I can reach out to and say, hey, your script kind of bugging right now. You might want to fix that. Or hey, can you add this and stuff like that? The TFC is right here. It's literally this middle box. That this is a part of the Strat Teach V2. And you can move this box anywhere. It normally comes right here in the right-hand corner. But that's where I put my script indicator at. That's where I have my script box at. So I moved that box from over here because I think it comes default over here. I moved it to the middle right here. I use ATR versus D. No, is it ATR versus DTR? Yeah, I use my own script, ATR versus DTR plus ADR zone plus SSS 50%. That's the ATR indicator that I use. Because it has the ADR zones whenever I go down. You don't see them right now. They only show it whenever you go to an intraday chart. So if I went to a 15-minute chart, now you see the ADR zones, the upper and lower zone. But long story short, that's how you would do that. You would go through the different sectors, look at these different stocks and see which stocks are correlating with the sector. Maybe that sector is going to be a 2-2 continuation, but you can find a stock that maybe has an actionable signal per the strat. Actionable signals in the strat are hammers, shooters, and inside candles. All right. The easiest that people like to play is like the inside candle breaks. All right. So that's ultimately how you would get prepared for the quarter. You look at the quarterly charts, and even now you want to start looking at like the yearly charts. All right, if you're using TradingView, you can input a 6-month time frame. Start looking at the 6-month chart. If we look at XLY, all right, we just got a new 6-month candle back in July. We'll be getting another one at the start of the year. So this is how going into the year, you could potentially have a setup that maybe you don't see on the quarter, but on the 6-month chart, there's a setup there. All right. Just like before, let's go to like a 12-month chart. Before we went 2-2 rev, or we're basically 3-2 up, 2 down reversal on the year, we actually went 2-2 reversal on the 6-month chart first, right? And you could use that as an indication that, hey, if we're probably going to go 2-2 rev on the year, because for a 2-2 reversal, right, your first price target is going to be the 2, right, before the 2 up, or the 2 be, or whatever candle is before the 2 up or 2 down, which is this 2 up right here, the low of it, which is actually, if you look at the yearly, that's the low to break last year's low, right? So on the 6-month chart, if we hit price target, right, on the 6-month chart off the 2-2 rev, if we hit price target, we're going to go 2-2 rev on the year, right? So you could have grabbed 3-month out contracts when we went 2-2 rev here and say, you know what, probably the next 3 months, which would end the 6-month candle, we probably might go ahead and go 2-2 rev, well, 3-2-2 rev on the year. That's how you would look at those things, right? As well as using the 50% rule, as far as not Sarah Strat Sniper's 50% rule. I can't remember the guy name that has the 50% rule for doing the 50% on the candle, right? But you see, when we did poke back up, right, we nicked the 50% line and then we came right back down. So the 50% rule on the candles, which is basically just 50% of it in a trend, and you retrace 50% of the move you just made, that's potential, you're in retracement versus reversal territory, where it could be a reversal. You will want to see how it reacts to that 0.50. People use fibs, they use like those other numbers to look at that too. Some people have like the golden pocket. I think when it retraces to like 0.618 or something like that. I don't remember what it is. But long story short, using those different things can help you in determining where you should start looking at entries at. All right. If we are, because we don't go straight down, we don't go straight up. We're always going to have what they call contraction. Some people just say use it expansion and contraction. If price expands into a direction, right, more than likely it's going to contract or basically pull back, right, and then expand into that direction again, and then make a lower low or a higher high. All right. So this is how you prepare for those different things, and you're always supposed to be using a top-down approach. So when you're formulating trades, you're always formulating those trades from a top-down opinion, which means starting from And I go to the year and I go to the, 6 month and the quarter because I want to really understand overall where we are. We could have a short-term bullish bias, or the market could be short-term bullish, but overall longer term, right? Short term, it could be like a couple weeks. Longer term, for a month or two, we could be more so bearish, right? So I could say, oh, well, I can ride this bullish to this mark because if price was to pull back around this area, this could be where shorts, where we basically might start going bearish again, right? And that's why you use the top down approach, because we could be bullish reaching back in the longer scope of things of the overall drop that we've had. When we did push up and everybody thought that was the bottom, we basically, for a lot of things, were just pulling back 50% of the move to continue down for a lot of stuff. All right. So that's why you always formulate it from the top down. My analogy with that would be, essentially, it's easier, right, to go from the third floor to the first floor. You can literally jump, literally, from the first floor. I mean, from the third floor to the first floor. Or if you're taking the steps, which when we had better knees as kids, because I'm getting old now. You know what I'm saying? I'll be 1 year closer to 30 within the next few months. All right. We're getting old. Them knees jumping down them steps don't hit the same now. You jump wrong and might tear something. All right. But long story short, when you're going down the steps, it's easier for you to jump down the steps, right? Running, you jump. You jump from where the steps are about to start to where they end again. And then you know how the steps go. You have the walk around part, and then the next flight, and you just jump from that flat part to the next flat part, and then you turn and you jump from that next flat part, to the next flat part. All right, it's easier to go going down. You can't just jump that far going up, right? So from a top down perspective, it's easier for you to get the buys based from the 3 month to the month to the week and down, right? Because that's just the way things are flowing, right? From a top down. But it's hard for you to jump from the first floor to the third floor, right? You have to walk up the steps, or you have to take the elevator, right? Which, if we take elevators out of this, it's harder to go from the first floor to the third floor. And that's what a lot of people are doing in their trading. They're trying to look on the 5 minute and dictate the trend on the 5 minute to the hour to the day. And they're going to swing based off of what a 5 minute chart is saying. That's hard. Where it would be easier for you to easily look from, again, a top down perspective, the higher time frames down, instead of trying to go from the shorter time frames up. And that's where a lot of people get clapped on. They try and frame opinion or a bias off a lower time frame and then look up. They be like, oh, we just got a 2-2 rail on the 5 minute. Let me go look at the 15 and 30. No, you're supposed to be looking at that first, and you take the reverse or the entry that is lining up with what that higher time frame is doing. All right. The strat works on everything. It works on everything. It's the same thing. Literally, it is universal. All right. It is universal. All right. If you truly have the understanding of the strat, you would know that it would be universal. All right. The time frames you use are just different, which is basically what I was just explaining. Right. Day trading, the strat, you probably would just want to look at the daily, 4 hour, 2 hour. I mean, it's a lot of time frames, but it's nothing to just look at and see what the candle is doing. The daily, the 4 hour, the 2 hour, the 1 hour, the 30, the 15. Right. Those would be like your day trading time frames. All right. For swing trade, you would want to preferably look at like the hour, the 4 hour, the daily. Sometimes you can even look at the 2 hour, just like the last, because there's sometimes where the 2 hour gives you an entry going into the end of the day to swing it to the next day. Maybe there's a reversal on the 2 hour time frame, right? And it ends up making the day look like a hammer. Um, but I would say lowest would be the hour, the 2 hour, the 4 hour, the daily, the weekly, the month, right? And it's just, you would use the higher time frames to formulate your opinion, right? The month, it looks like we might do a 2-2 reversal in the month or something like that, or 2-2 continuation. On the week, it might be a 2-1-2 continuation or 2-1-2 reversal. The daily might have, triggered something, as well as the 4 hour, right? You're using like the 4 hour daily, 2 hour for like your entries. And it's just going to depend on how far you're swinging your expiration. If you're doing a month out, you would want to look more so like the 2 hour, 4 hour daily, right? Because getting a crisp entry, you can get that off, really off the 4 hour. but you can even narrow it down even to like the 2 hour. The hour, sometimes it might be a little bit more noise. You probably get a little bit more consistency and a better entry without feeling like you're too early on a 2 hour chart. Um, so yeah. I don't know what you mean the strat volume two, but the indicator is the strat teach V2 right here. That's the indicator of the strat one word, teach, space V2. All right. So whenever you're going into your trading week, right, one of the things to help you narrow down your list, because that's one of the other things people ask, how do I narrow down my list? What you want to do is, one, make sure you're not overlapping in sectors. Sometimes people be going into a trade. We say, I'm looking at Oxy, CBX, XOM. All right, you got 3 oil stocks. Pick one or pick two and make one of them honorable mention. So one, you can just pick one stock per sector. That's going to help you narrow it down. And you don't have to look at every sector. You could do 4 sectors. A lot of times you pay attention to my list and you look at the stocks and you research them. I'm never really double dipping in the same sector unless I say, oh, well, CBX might more so have the actionable signal than Oxy. Other than that, for the most part, I'm usually only going one stock per sector, which helps. Because if that whole sector moves in that direction, why am I needing to double dip? Because one thing about double dipping, if you're right, you're right. All right. But if you're wrong, because you could be double right, you'd be like, oh man, I ran it up. I just participate in that sector. Yeah, but when you're wrong, you double wrong too. Right. So the positive side is if you're right, you double right. The negative side, if you're wrong, you double wrong. So it goes hand in hand. So if you, let's say you trade AMD and Nvidia and you in both and they both go against you, hey, you gonna have to hurry up and try and get out both of them. You have to pick which one you want to get out of quicker. So yeah. So that's one of the things uh that you have to look at. Support and resistance, I don't use traditional support and resistance. So one of the things that I did do in a previous class that I'm gonna leave on this recorded class is getting your basically support and resistance. Easiest way to do it. All right, I did this for Tesla this past week, and I did on Instagram Live too. That's what these like smaller lines in between. They're the Instagram Live ones. The ones from the class last week are these other ones. These are like the new ones I put in, and you can see how price is respecting those levels. Because people ask me about Tesla, even though I don't even trade that. I'll be quick to tell people I don't rock with Tesla like that, right? So how you get those levels or how I get them is because this is the easier way. What I do is I go to indicators. I type in fixed volume range profile. All right. This is the indicator. Fixed range volume profile. All right. Let me just exit out of all these. And you can see the fixed volume range profile right here. That might have been the last one I did. So if you want like a bigger range, like the daily, because the lower you go in time frame with the volume profile, the more detailed the volume nodes are going to get, right? The lower in time frame you go. The higher in time frame you are, the bigger the nodes are going to be a lot of times. So like let's say you're on an intraday chart and you're coming back through this range right here, like I was showing. Essentially, like if you look at it, if I click on it, I basically drew from right here from this candle forward, right at the time. Whenever I initially was showing this on Instagram Live. All right. That's if you want the smaller range. If you want the bigger range, because some people like to, oh, what if I want the weekly range or the daily range? Really, you could just do it on daily. So let's say I wanted the support and resistance from this whole range that we just created. Essentially, I would just go to volume profile, fixed range volume profile. All right, I turn off the magnet and I would just start on this candle and I would just drag all the way to over here, right? And you see how the nodes are. What I noticed, because I was like, bruh, a lot of people just be focused on the nose, but there's actually something if you pay attention to it, how the wicks are formed. So what I noticed was if you actually mark the in between, which are these black lines, if you look at it, these black lines right here, if you start marking them like that, boom, I'm gonna make it yellow, right? If you start marking that in between, you can get your support and resistance. Because that's a lot of times where the wicks are happening. The bodies are normally in the middle of these nodes, right? A lot of people would like draw a box, right? Just to have the nodes extend out in time. But really where the wicks are normally happening is happening at these creases. It's happening at these in-betweens, right? Like where this body is at, it's in this volume node, right? So how you could tell is if it's going to the next range, if it closes in this range, right? Because you see it was right down here. If it closes in here, right? The next count you want to see it close either in this range or above it, right? You want to see the close that's getting higher and higher, right? And let's say you was like, oh, I'm in this long, I might get out, right? You would get out when it basically closes below this little line right here. So I just noticed that an easy way to get support and resistance, instead of trying to go all the way back in time to see how many taps it is, just mark these in betweens in the volume nodes. Because with the volume nodes, the main part, that's where the body is closing. That's where it's saying majority of the volume happened at, right? So if I just mark all these, try to mark all of them, and then we'll go down to like a lower time frame. You can see how it reacts to that. So you ain't got to be asking people for levels. Boom, de boom, de boom. Is my support and resistance right? Boom. Let's create a new way for you. I don't know if it's new. I can't say somebody ain't think of this before. I don't know. But boom. And you can see how where all the wicks are happening at. Just pay attention to that. All right. And again, I'm marking the crease. And again, it's just because it's something I know, because I know somebody asked me a lot, what's the importance of it? It's just something I noticed. And that's why I tell people, y'all got to get in these charts and just see if you notice patterns, if you notice habits, right? If I let me mark these down here. Because literally, if you go back in the chat and you search my name and you search where I say levels from the chart, Tesla, Apple, Snow, those were the three that I did in that class. To a T. To a T. To a T. Look at that. To a T. I don't even trade these. I don't trade Snow. I've traded Apple. I don't trade Snow or Tesla. So now if we go to intraday time basis, right? Oops. Boom. Look at that. To a T. I do this shit. And it's recorded, me saying that. I don't even toot my horn that much, but some people be trying to try me. I do this shit. I figure stuff out. I get results for people. All right. To a T. To a T. I ain't have to see how many touches, none of that shit. You see, I ain't even look at it. I just mark the volume nodes. To a T. Come on, man. Stop playing with me. All right. So you see it, as Crow would say. Boom. What does the blue and yellow sections mean? In the volume profile, let me go back to that higher time frame. Um, it does something different. I think that's like the value parts. So here you go. The value area up, value area down, up volume, down volume. So whenever it's in the value area, which is really just where majority of the volume takes place, if I'm not mistaken. All right. It's gonna be these colors when you leave the value area. All right, which is probably the value area high and the value area low, right? This is just the middle of it. All right. That's when it goes back to green and red, essentially, which would be, bullish volume, bearish volume. Other than that, once you get the lines, you could just, delete it or turn it off. Essentially, I don't leave it up. Um, so yeah. So how you would look at that would just be on a lower time frame. What you're trying to see is, let's say you're in a position, right? You want to basically what you would think is, if we close below like this 270, 248 line, right? We might come back and retest it, which we did almost to a T, right? Almost to the cent. But what is the hottest candle? 272.47. Literally 1 cent off. 1 cent off. All right. You might sometimes come back and retest it. Also, you have the upper ADR. So you have two things acting in here, right? But what you would be expecting or thinking is, if we close below here, we're probably going to this line. And we may wick here, maybe come back up here and retest, but you're trying to see the actual close below. So whenever you're watching this in real time, you want to see the close below, because just because we break it, don't mean we're not going to wick back up, because you see the wicks. All right. You actually want to see the close below. All right. The close below. Because let's say you did enter in here and you like, if it breaks below here, or I'll get out. No, you want to see the close below. All right. Because then boom, you can route it up to here. All right. So that's how you would do that. That's support. The yellow lines are like your support resistance. On volume profile, the red line is basically the POC line. And basically above the POC line is bullish. Below the POC line is bearish. All right. I know about the POC line. In my regular trading, for the people who have my course, that's actually what I really use. I just figured this technique out here in like the last couple weeks. Last couple weeks to like a month. The girl I'm dating, I taught her this. So yeah. Yeah, the POC line is this red line right up here. That's your POC. It's called point of control. That's what POC stands for. That's this line. And basically, if price is below it, it's bearish. If price is above it, it's bullish. It usually acts as a magnet. A lot of times you'll see price come back to POC line and shoot off of it. Right? It's kind of like, what's something that used to bring people in and then push? It's like that. I don't know what really does it. I can't remember. There's some movies out there where it'll bring in people and then push them out. But long story short, it's almost like the Force, right? Somebody, Darth Vader bringing somebody towards them just to push them away, like force pull, force push. That's kind of like what the POC line acts like. It'll pull price towards it like a magnet and then push it away. I don't know what to tell you. You got to type it in as one word. So ATR versus DTR, no spaces. How you find that line is just literally this red line right here. It's not that big. That's what she said. Anyways, I don't even know how to make the line bigger. But long story short, it would be this red line right here. Like, it has that too. But that's long story short what it'd be. It's usually a red line if you just go into settings, if you want to make it a different color to where it stands out. Uh, Here you go. There we go. Make it a line bigger. Let me make it like purple. No, like neon green. See, there you go. Here's the POC line right here. So yeah. But again, I don't use the fixed range volume profile other than marking those levels. I have another volume profile that I use the actual POC line off of with certain um coordinates and stuff, like certain settings that I like for the POC lines to be based off of. So I'm gonna say these lines. We'll see how this week goes, because actually we might break below here. But let's just say we have a bullish week this week. These would be the lines that would come back through. So yeah, that would be that. All right. Days trading range. I'm pretty sure that's probably what it stands for. DTR is just basically the range that it traded that day or that week. Because if you change, it's really supposed to be that day's trading range. But if you change it to a weekly or monthly chart, it's going to tell you what it's traded that month or that week. All right, as well. It's just telling you what it's currently doing versus what it normally does. All right. So does everybody understand what's better, swing or day trading? There is no better. That's relative. Y'all got to get them type of thought process out your mind. Is this better? Is RSI better or is MACD better? There's no better. It's what works for you. Some people cannot swing trade to say they like it, just mentally doesn't work for them. They're better off day traders. There's some people that aren't good day traders. They're better off scalping for 10, 20%. All right. You have to figure out what fits your personality. Them YouTube videos be having people think too much, invest or better. Here's the best day trading strategy. Here's the best indicator that'll help you not lose so much. That is just to make you watch the video. All right. Don't be a sucker all your life. That's not how it works. Those are just headlines to grab your attention because we all want the best for ourselves. So we're obviously always going to seek out the best phone, the best, a lot of stuff. When should you recheck to see if the POC line has changed week to week? Again, I don't use the POC line in that way. All right. So how I use it is normally just gonna move on its own. Like it just gonna move. With like how I use it, because I don't use the fixed range volume profile again. Outside of putting that on there, after you put it on there, that's literally it. You hide it. You're not using the volume profile. You're just using the in-between parts, right? To get support resistance. After that, turn it off. All right. So yeah. Other than that, the script that I use for POC, because I just use POC line. I don't even look at the volume profile aspect. I just use POC. That's just gonna move. Like as the point of control changes and there's another area where volume has increased and is higher than the area that it was at, the line is just gonna move by itself. So unless you keep up with where the line is at and mark it and say, hey, here's the line right here. It's at 267.36 right now. Unless you keep up with that, you won't even see that it really moved until, like, let's say price was down here and now it's up here. And you know for a fact that it was down here and now it's up there. That's going to be the obvious change. But if it goes from like right here to right here, you probably not going to notice unless you just really keeping up with it. How far back do you go to chart support resistance lines? Just focus on the range that you in. So I just did this range because price has just been in here. But like if I wanted to see how price was moving from this range, I probably just go from here forward because it's kind of like starts it being in this range down here. I just probably go from like this candle over. And again, I'm using fixed volume range profile to get that. I'm not going back and saying, oh, this got 10 touches right here. Boom, mark this support level. This got blah, blah, blah touches right here. All right, I'm going to mark this one. First of all, I don't really use support and resistance like that. I use broad information. Broad information are my support and resistance. I thought this would just be a cool hack for people that actually do heavily use support and resistance lines. How do you choose your option entry based off the strat? Yeah, broad informations. You watch intro to the strat, it'll start you in learning about broad informations. But there's also YouTube videos I have for broad information, part 1 and part 2. I might make another one because I do got to redo intro to the strat for personal YouTube channel. If you watch if you watch Broad Information Part 1 and Part 2, they'll show you a simple way to draw. All right. So, which I'll normally I have that in the chat somewhere. I don't know if you search like my name, and you search like has link. Hold on, let me see if I can find it real quick. Boom, boom, boom. Let me see if I can find that. So I could just put in the option chat. Has link. It should be like a group of videos that I put like together with all this different stuff. Let's see. So let me take these. Let me copy these. 1 second before we get off here, and I'll stop the recording.